If you're considering to yield farm on Polygon and are looking for the best protocols to do so, this is the video for you. We will dive into the best performing options, focusing on protocols that are battle tested, audited, and have shown solid performance through the years. Welcome back on the channel, guys. Today we're diving into the world of yield farming on Polygon, one of my personal favorite blockchains for DeFi passive income over the past few years. Polygon is an Ethereum Layer 2 solution that has seen significant volume and a growing number of active users. Polygon was one of the first blockchains where yield farming protocols really took off, establishing or helping to establish DeFi as a major branch or niche within the crypto space. Before getting started, quick disclaimer, this is not financial advice, I'm just sharing my thoughts and experience with some of the best options for yield farming on Polygon. Remember, crypto and DeFi are highly volatile and risky environments. And by the way, if you are new to the channel or even to yield farming, check out my introductory playlist. By the way, if you are new to the channel or to yield farming, check out my introductory playlist. It includes videos that will give you a solid understanding of different protocols to yield farm, how yield is actually being generated, because in case you didn't know, this yield comes from actual utility from using the blockchain. And of course, I also have information for you about the risks involving yield farming. Watching those videos first can help you feel more comfortable with today's topic. So if that's your case and you are new to the yield farming game, you can find that link under in the description and get more acquainted with all the information I'm also going to share with you today. So let's take a first look at where Polygon stands in the overall grand scheme of things in DeFi. It's the 9th ranked blockchain when it comes to TVL. The TVL is very close to $1 billion and it's very far from what it was back in 2021. Although if we go and sort this list by number of protocols, you see that Polygon climbs the ranks. It's the 4th main blockchain when it comes to sheer number of protocols, meaning that there's a lot of development, there's a lot of teams actively deploying protocols on Polygon. Looking at the number of active addresses for the past 24 hours, Polygon is 6th with over 480,000 wallets active. Looking at the volume for the past 24 hours, we see over $80 million in Polygon, so they're ranking 7th when it comes to that. Polygon is also one of the most bullish blockchains when it comes to the integration of the real-world assets narrative. So there's plenty of institutions, companies, and even services that are considering to integrate with Polygon. And I think that will open a bright door for the blockchain's future when it comes to mass adoption by the mainstream society. All of those things combined make Polygon to be one of the most appealing options to yield farm on, at least to me, in my personal opinion. I think the METRIX price is very underrated right now, with only 38 cents per token. Looking at the TVL action for the recent past, we see that we were very close to $10 billion back in summer of 2021. This was DeFi summer, the last bull run, and since then, Polygon, as many other blockchains, saw the TVL to slowly deplete, and now we are on a down low. But regardless, as you will see through the video, there still are plenty of very solid performing options to yield farm on Polygon. Now here on the protocol rankings, we have all the protocols that have been deployed on Polygon. They are ranked by TVL, but we are focusing on yield. We want to farm that yield. So for that reason, I'm going to go here on the right and sort this out by the fees generated by each protocol for the past 30 days. This will give us a better understanding of which generate the most yield. It's without surprise that I see ranking first and second, both DEXs, Uniswap and QuickSwap. And if you look at the fees generated, they're very much on par with one another. But if we throw the TVL into the mix, you see that Uniswap has almost 5x the TVL of QuickSwap. So this means that there's more competition on Uniswap. So definitely QuickSwap will have, in theory at least, the best performing pools. Now, from experience, I know that these couple of DEXs do have great options to yield farm on and provide liquidity to their pools, but let me also throw into the mix SushiSwap. They're ranking 15th here on fees generated. They only have a $15 million TVL, very close to 16 million, but they are also a very reputable DEX. They are on, when it comes to the products and services they offer, they are pretty much on par with Uniswap and QuickSwap. So although they are out of the top 10, definitely worth to take a look, especially if you are already deployed into Uniswap or QuickSwap here on Polygon and are looking for other ways to diversify your assets. Now, before diving into specifically each protocol here, let me just give you a quick breakdown or sort of an intro of the most interesting protocols out of here on the top 10. So the couple first spots are taken by DEXs. Then we have Aave, which is a lending protocol. This is the biggest protocol, or at least one of the biggest in DeFi overall, not only just on Polygon. They have here in TVL almost $300 million, but overall their TVL allocation in DeFi across all chains is in the worths of billions of dollars. And you can use that to lend your funds there, you deposit them, and you earn interest when other users come and borrow your funds. It will be on the lower end of the risk level when it comes to yield farming. And of course, because of that, the rewards will be much lower than compared with, for example, providing liquidity to a given pool. Then we have Polygon itself. If you want to be a validator, it's a bit more tech intensive and it's needed for you to have some sort of know-how. It's not rocket science by any means. Anyone willing to learn can definitely learn. And if you go that route, there's definitely fees to be taken, because as we saw already before, Polygon is definitely one of the most volume heavy and used blockchains right now. And because of the whole real world assets narrative that I also mentioned, probably it will keep that way in the near future. Then you also have Gamma, which is an automation protocol that automates positions for liquidity pools. You can use Gamma yourself to automate a specific position in a specific pool, or you can become a Gamma investor yourself. If you want to know more about that, check the description. There will be a link for my review of Gamma protocol. And as you can see, for the past 30 days, they generated over $390,000. They operate within different chains, and basically how they work is just that. They automate positions for users, and whenever they do so, they do take a percentage of users' profits as a way for them to be paid for the services they are providing, and rightfully so. Then we have Taurus that generated very close to $250,000 for the past month. Taurus operates in 4 chains, and they are focused on yield optimization and also automated investment strategies. They're pretty much focused on yield farming, and they make yield farming simple to users. Anyone can participate in yield farming on Taurus by just depositing their assets into various liquidity pools, or as they call it, vaults. Then we have Azuro, and Azuro is just a betting marketplace, probably not as popular as Polymarket, but right now they're having higher fees than Polymarket. I'm not really sure why, might be a bug also, but that's what's showing right now. Then we had GeoDnet, and this is a protocol which is decentralized and even physically, because they have a decentralized physical infrastructure network which is focused on improving GPS allocation accuracy. But they are not actually a protocol that traditional does yield farming or provides yield farming opportunities. Instead, what they do is they incentivize users to deploy and maintain their own base stations, and participants that do that earn rewards in the form of the GEOD tokens for contributing to the network's infrastructure and data accuracy. We'll touch more on that later on in the video. Okay, now that I just gave you a brief introduction of the main protocols here on the top 10 to yield farm on, let's jump on to the DEXs, Uniswap and QuickSwap, take a look at some of the best performing pools. Now we can come here on Uniswap and start browsing, trying to find the best performing pools. As you can see, the TVL right now is almost 62 million on Polygon, and the volume for the past month is $1.42 billion. So definitely a lot of volume ongoing, and overall a really good volume to TVL ratio. The volume is multiple times higher than the TVL, so that's already showing us there will be really good options here. So I just sorted out the pools by the ones that have been generating the more or the most volume for the past 7 days. And you'll see that there's different options here. The first ranking pair is a stablecoin pair. Then we have Polygon paired with APEPE, which is a meme coin. Right now, this is the leading meme coin on Polygon, although this is not that much of a chain to trade with meme coins. I mean, there's always going to be one meme coin that tries to be the flagship one of the chain, and right now on Polygon, APEPE seems to be the case. So we're looking right now at the 7-day volume rankings, and if we cross that info with the 1-day volume to TVL, it gives us a better idea of the best performing pools. So over 1, it's even better because it shows us that there's higher volume than TVL, and volume is a key factor to understand if the pool is profitable or not. And right now this one is standing out. It's a stablecoin paired with wrapped Ethereum. Overall, you will see that since Polygon is an Ethereum layer 2, anything that involves a stablecoin, Ethereum, Polygon token, Bitcoin, or other blue chip assets will tend to perform very well. So you see again here with the over 1 volume to TVL ratio, in the case it's 1.2, we have Polygon paired with the stablecoin, in the case USDT. The TVL is also quite substantial, is closing in on 1 million, so it should be an okay pool also to provide liquidity. Then we have Bitcoin paired with Ethereum, also great option, although the volume to TVL ratio in here is a bit on the lower end. Great option also when you have Polygon paired with Ethereum. They are heavily correlated, so you'll not tend to experience as much impermanent loss, although Polygon is not performing quite so well for the past months. Now you can go and do the same and try to find opportunities on QuickSwap, but also you can use external tools, and in the case I will use METRIX. METRIX Finance, although I am affiliated with them, you don't need to have the pro version. Actually, you have plenty of the features that they offer available simply with the free version. And if you're just getting started, you don't need to pay for any tool actually to start getting results. Matter of fact, I do think that it's better for you to start yield farming for yourself without relying on any tools, knowing how to do everything from scratch. And from there on, when you get consistent results, then yeah, you can level up your game, buy a pro version, for example. That will help you by giving you more convenience and a more depth of information. But like I said, to get started, you don't need to buy any version of any tool whatsoever. So if you want to use METRIX, everything that I will be showing here will be by using the free version. If you want to check it out, I will leave a link under in the description as well. So the first thing you want to choose here is the exchange. We'll leave it at Uniswap, and then we are looking at opportunities on the Polygon chain. So I'm selecting Polygon, and now it's showing us all the pools available. So you can use multiple ways here to sort the information out. I'm just going to use the 24 hours average fees to sort out by the ones that have generated the most fees. Again, this is something that it will fluctuate. It depends on the markets. So depending when you are watching the video, you might get different results. So for the past 24 hours, the ones that have generated the most fees on average have been Ethereum paired with a stablecoin, like I told you, USDC.E, a stablecoin paired with wrapped Bitcoin, Aave paired with Ethereum, Ethereum with other stablecoin, another pool of Ethereum with stablecoin, Ethereum with Bitcoin, Ethereum paired with Link. This is a very good pool also because these two tokens are very strongly correlated. Then we also have a couple of pools of Poly token paired with the stablecoin. Of course, being on Polygon, you want to expose yourself to those pools because highly likely they will perform good, and it seems to be the case. Let's go here on the second page because I really thought we would find a pool of Poly paired with Ethereum, but it wasn't the case. So yeah, here it is, right on top of the page, wrapped Ethereum paired with wrapped Poly. So another great pool also to provide liquidity. They are both blue chip assets. They are both heavily correlated. So really, really great options. If you find a pool that you like, you just click here on the star icon and you can see that it's just added to your favorite pools. So as long as you keep on stacking those, you can use them to then go on your favorite pools and sort things out more efficiently. So from here on, you might want to go and try to simulate and see what you can get potentially from investing into a specific pool. So let's go with this one. Wrapped Ethereum paired with wrapped Poly. It's with the 0.05% fee tier, and for $1,000 of deposit, you see that with the current input of options, you get 57 cents worth of dollars for the next 24 hours. This is just a projection, but of course, if you're not happy with it, what you can do is that you can tighten up your ranges. So you can see here under the liquidity price range, you have a couple of things to look at. Calculation range, that's the price range that you see here on chart. It's automatically set to be for the past month, so it allows you to backtest how the pool has been performing, and you can then take that information and set up your concentrated liquidity ranges accordingly. It shows you the current price per token of Poly per Ethereum, so how many Poly tokens you need to buy one Ethereum. And then you have here your minimum range and your maximum range. You can then see that reflected here on the pool. The red dash line is the current price. The green dash line is the minimum of your range, and as you can see, the top range doesn't even show. So we can definitely tighten up these minimum and maximum. You see, we went down from 25 to 5% on the maximum, and we'll do just about the same here on the minimum. And let's just avoid that peak on the way down. And this would be a range that potentially could perform very well. And this current range overall is 14%. You see, minimum is -10, maximum is +4. And if you want to backtest even further, you just need to add some days here on the calculation range. Let's go and see for the past 2 months. So actually, this range would perform very well actually overall for the past 2 months. So it seems to be a solid option. So let's go up here and see how much it improved our estimated fee. So yeah, we just went up from under $1 to $2.45 a day per $1,000 invested. Here on the right side, you also have the liquidity distribution. In areas where there's higher liquidity concentrated, you will earn less fees. In areas where there is less liquidity being concentrated, you will earn more fees. And this is basically how you can use METRIX to get a simulation of when you deposit into a specific liquidity pool. At any point, we can come back here into the Discover section and from Uniswap switch to QuickSwap and do the same thing over again and try to find the best pools. And also there's SushiSwap here on the list, so very much worth it also to take a look into SushiSwap's pools on Polygon. Now let's move on to Taurus, and as we briefly touched already, this is a DeFi protocol that is focused on yield optimization and automated investment strategies. They have 2 vaults users can take part on, leveraged and yield, although on Polygon only the leveraged one is available. Now the leveraged one is going to be more risky as always. Anything that involves leverage definitely increases the risk factor, but also with high risk comes the potential for high rewards. But if you want to focus on yield, basically they will apply delta neutral strategies, which is nothing other than they will deploy a long and a short that will cancel each other out. Therefore, you're just focusing on getting the yield from those assets. Now going back here on leverage, as you can see, if we filter from all of these 4 blockchains just for Polygon, it will only have these 3 options. So you'll be able to leverage within the Polygon network by using 3 different assets, which is going to be BTC or Bitcoin, Ethereum also, and Matic, or right now it has been rebranded to Poly, so it's Polygon. You will see that, for example, here with Matic, you can only bet on minus 1x when leveraging, or also 2x. If you go to Ethereum or Bitcoin, only minus 1x and 3x are available currently for both. So let's take a quick look here at their docs to understand a bit more about leverage. We're not going to go full on in depth with it. Taurus leverage tokens are a way for users to gain amplified price exposure to assets on the blockchain. The Taurus leverage vaults automatically take care of managing leverage. So when you're playing with leverage, you're playing with borrowed money, so you deposit and you leverage using your deposit as collateral. Or actually, you don't do it directly because Taurus will do that with their algorithms, so it doesn't really require any active involvement from the user. For applying these leverage token strategies, they are using two different underlying protocols, synthetics, perpetuals, and Aave. And since each of these operates differently to achieve leverage, it allows for a range of trading strategies and risk profiles. At the same time, they do have some liquidation protection. All Taurus leverage tokens have built-in protection against downside liquidation. Whenever a token decreases in value, the leverage also adjusts down to maintain the target leverage ratio. That's what TLR stands for. But of course, it's leverage and there's going to be risk. When there's too much volatility in the markets, Taurus vaults can underperform typical leverage positions. Now let's talk a little bit about the GeoDnet, and they are implementing a network that will boost the GPS accuracy. Therefore, this already brings real-world utility to the protocol. It doesn't really allow you to yield farm per se, but in order to take part of the GeoD network, you have to purchase a miner, and this is a station that will then help to establish this physical network that will amplify GPS signal across the globe, right? So you have to purchase a miner, install and optimize, connect and earn. When you buy their miner or station, you will join the network, helping it to increase coverage. And any user that owns one of these, what they call RTK based stations, just has to maintain and operate them. If you do that, you get to earn GEOD tokens over time. This is the reward that you'll get for contributing to their network. So they're partnering also with Canada's a national entity, so part of the government. We can take a look at the live coverage map. So the green dots is where there's already these stations operating. So if you own, for example, land in some sort of rural area where likely there will be not as much coverage, potentially you will earn more. And there's actually liquidity pools with the GEOD token. So potentially you can mine those with your station and then deposit them into some of those pools to earn some extra yield. And we can just take a quick look at those. They are both pools on Uniswap v3, so they are concentrated liquidity pools. One pairs the GEOD token with a stablecoin USDC, and the other pairs it with wrapped Matic. So this is something that has a lot of liquidity, especially the USDC pool. It has very close to $500,000. The average APY for the past 30 days is around 17-18%. So definitely worth to take a look if you're interested in GeoDnet. Now, these were just some of the most juicy opportunities when it comes to yield farming on the Polygon network. If you want to join a group of like-minded people invested in DeFi, consider joining the UIG from the Crypto Labs team. I will have a link down under the description. In there, you can get some personal guidance that will help you steer or even start your yield farming strategies. And at the same time, they also do have a ton of free material to grow your knowledge about DeFi and yield farming. If that sounds interesting, follow my link. It will give you a 20% off discount on your first month. That being said, guys, if you also have any questions, or also if you want to mention some protocol that I didn't on today's video, let me know in the comments which one it is. If you're getting good results while yield farming with it, I would love to hear about that. That being said, guys, thank you for watching. Take care. I'm going to wrap this one up and I'll see you on the next one.